Why is now the time to go public?
Birkenstock is somehow always the second best option, because the best option for human beings would be walking barefoot on soft uneven grounds, and because we're surrounded by hard surfaces, so that's why people have to go for the second best option, which is wearing a Birkenstock footbed.
Right guys, buckle up your curiosity, because today we're going to be unravelling a story that's been tiptoeing in plain sight, waiting for the world to take a step forward and dive foot first into its tail. This, my friends, is the truth of the recently IPO'd Birkenstock stock. Imagine a picturesque German village in the late 18th century, where cobblestone streets wind through a world of craftsmanship and tradition. In this charming setting, the Birkenstock story takes its first steps. In 1774, a man by the name of John Adam Birkenstock, a skilled cobbler, went beyond repairing shoes. Driven by a relentless commitment to reliability and comfort, he created the first pair of contoured insoles. These were more than just shoes. These embodied John's commitment to enhance the well-being of everyone in his community. Generations of Birkenstock family members continued the tradition of refining and perfecting the shoe's design. But the story didn't stop in a small village in Germany. Birkenstock wanted to get these shoes out to the entire world, and they succeeded. In the late 1960s, Birkenstock had a new home: America, finally bringing European comfort to a global audience. Now they're poised to make a significant step into the world stage with the upcoming IPO, welcoming retail investors like you and me from all over the world to invest in the business. While a business's performance is crucial, it's also important to understand that a company's price at IPO is not solely determined by that. Get it? Solely? Okay, sorry. The concept of a fair price for a company involves a complicated balancing act that involves several factors. Wall Street or your investment brokerage app is going to try and convince you that buying this stock at basically any price is worth it because there's just so much growth potential in this business. Let's take an example of an IPO that had lots of hype but absolutely failed to deliver on its expectation: 𝗙𝗙𝗪𝗔 back in 1999. Market hype at its IPO drove the share price to incredible heights.
Now, we have an IPO that's going to go today, and when I mean go, it is going to go. The estimates I'm hearing are staggering, but watch 𝗙𝗙𝗪𝗪𝗔 systems.
Retail investors were largely left out of the 600% gain in the share price, but only a handful of insiders actually benefited from this. The point I'm trying to make here is because of a lack of information on the stock, we only get 3 years worth of financials, and because of the hype of it being released on this particular day, the share price can be incredibly volatile and does not typically reflect the actual value of the business. As Birkenstock stock goes public, all the warning signs that we typically see on an IPO are present. We have limited financial data, only 3 years of earnings. This should make us cautious. Instead, analysts are using it as a way to project insane amount of growth going into the future, even though for all we know, that insane growth that we're seeing currently has only been present in the last 3 years. And how will it being public affect the quality of the actual product? Up until this point, Birkenstock have been meticulous in making sure that these shoes are manufactured with quality and care. Now, the company is going to have to prioritize shareholders a hell of a lot more. How is this going to affect their brand reputation and the product's quality? Of course, Birkenstock are making big promises on maintaining their quality, but until the company has been public for a more significant amount of time, we have no way of knowing this with certainty. Already, the market cap of Birkenstock has fluctuated enormously: 2 billion in 2 days. 2 billion of wealth lost.
There's a Birkenstock continuing to fall today, just the latest in a series.
This raises questions as to whether the IPO risk has fully been eliminated for investors. When we compare Birkenstocks to Crocs, a company with comparable finances, we see disparities that might raise eyebrows. Crocs have similar revenues and similar operating margins and similar amounts of debt and similar amounts of cash. Although I would say Crocs has the slight upper hand, especially when it comes to free cash flow generation, which makes it easier for them to buy back shares and pay off debt faster. Crocs, which has been public for way over a decade, offers far more financial data, for a lower valuation. This doesn't mean that in 10 years' time Birkenstocks won't have been a bad investment to make today. It just emphasizes and underscores the need for careful consideration. But for those who believe in Birkenstock long term, you now have an opportunity to become part of the business and become part of Birkenstock's 200-year-old story. In conclusion, I've certainly seen worse IPOs than this, companies that have been around for a year, 2 years, going up for billions of dollars with only something like 15 million in actual financials. So investing in an IPO can be risky, even one as renowned as Birkenstock, so just make that decision with a lot of care. While the brand's success is undeniable, there are no guarantees in the world of finance. Ultimately, whether you're an investor looking for profit or a shoe enthusiast, the Birkenstock IPO is a significant development to watch. However, for those seeking a more established investment, Crocs potentially offers a more compelling alternative. Thanks for joining us on this journey through the world of IPOs, Birkenstocks, shoes, and Crocs. As always, if you enjoyed this video, please remember to like and subscribe. I'm going to enjoy my cup of tea. Goodbye.